Hi everyone and welcome to the channel. Stay tuned to see my best investment ideas in the UK market as I run through every single holding in my UK element, my investment portfolio. Part of my personal story, I'm on a long-term journey to develop a £1 million investment account. Early days, I'm 4% of the way there. So let's have a look at the UK part. To start off by saying, overall, I'm implementing for now a 1 in, 2 out policy in order to simplify and concentrate the portfolio. As you can see here, there are 4 holdings that have been removed entirely. And part of the FTSE 100 has also been sold, and I've added in 2 excellent long-term holdings there into my American portfolio. So you'll see 2 more stocks in that one, but 4 less holdings in this one as I start to concentrate the portfolio. Just to note on Fevertree and Hargreaves Lansdown, 2 really strong companies, 2 companies I really like, but actually the valuation for a long-term doubling in 5 years isn't there at the current prices, but I do think they're strong companies with 0 chance of failure. Okay, so here are the numbers just to whet your appetite. You see lots of plus numbers there and a very small number of negatives. We start with the largest holding, that's the FTSE 100 index. Now that position has been trimmed considerably. I think it's at least £1,000 out of that compared to the last update towards the start of August. And this is all the references I'll be making. It's all in comparison to I think around about 6th to 7th of August when I last did the kind of pie charts detailed portfolio update. That's up 22 points, and I'm probably going to continue to wind down that position when I find good companies to invest into. I can't see the FTSE 100 doubling in the next 5 years, but I'm looking for investments that potentially can, which would be 15% per year compounded. Now, the best performer in the UK portfolio is the second largest, so that's good news. And this is a long-term holding of mine. It's a managed fund in the UK. It's up 188% in aggregate, so it's an excellent performance. I think it's doing around about 15 to 16% a year on a compound basis. Viva is one of my favourite holdings, great dividend stock. It was very undervalued last year. That's been pretty steady, up around 40 points or so for a while. Some nice dividends due to come in the future. So I'm looking forward to what that has to bring. And the company is in the process of simplifying its operations to core markets. Another 100% club member, and again another managed fund, 104% of that. Those dropped 7 percentage points since our last update. And the first red holding, which is Boohoo. Now Boohoo's dropped quite a bit in the last couple of weeks. It's only 9 points down. I believe there's some results coming out in the next week or two. So stay tuned for that, because that could very well influence the overall performance. In terms of Boohoo, I'm very confident that I'm going to make money on this one, and it's a good long-term holding. It's growing very well. It's a great balance sheet on the company. So let's see how management executes. They seem to be growing very quickly in the US, so there's some promising activity there. I'd just like to take a moment to pause to shout out to my VIP supporter on Patreon, and he gets to find out when I'm buying and selling, and we discuss stocks and look for good investments and discuss portfolio management. So next up is the FTSE 250 index tracker, and that's up 58 percentage points. That's doing pretty well, as is K3 Capital, which is one of the biggest movers since our last update, up around about, I think it's 15 points, so a plus 78% return. I'm utterly convinced I'm going to get 100% on this one, and I can see this getting to easily actually 150% over the next few years. It's a great business and with a lot of insider ownership. Unilever's not done quite so well in the last few months. It was in the 100% club, but it's dropped down to 84. This is a business that I'm getting a 5% dividend yield on cost, and they're doing share buybacks. And with middle classes expanding in Asia rapidly over the next 10 years, probably some growth potentially there if they play their cards right. Shell, I'm looking to get rid of Shell probably as the next one out of this portfolio, but actually the way that the oil and gas prices are going at the moment, I may just sit tight a little bit longer to see what happens there. I might be able to get a good sort of 20-30% boost in the next few months if that plays out well. And LNG, similar to Aviva, nice, solid, safe UK insurance company, great dividend, up 39 percentage points as well. City London Investment Group, decent results released recently, another nice dividend play, and that's up 34 points. Direct Line, a company I really, really like. Very, very steady company, nice big dividend paid, up 14 points, and that should just chip in sort of 7-8% a year into the portfolio. And BT, which I think has been the worst performer since the last update, it's had a rough couple of months, and it was up around about 60-70% if I go back earlier in the year. It has been dropping off. And I see Peter has requested, one of my subscribers, an update on BT. So I'm going to have a look into them and let you know my thoughts on that. For me, it's still a hold. I'm expecting this to at least double. I'm going to hold it. Although at the current price, I wouldn't necessarily say it's a buy. There are better things to buy out there at the moment. British American Tobacco, so that's the second negative. It's only 6 points down. And they pay a sort of 6 to 7% dividend per year. I'm not too worried about that. We've got a couple of cracking performers here with Investec, which I still think is undervalued, and Duke Royalty, both up 86%. Duke Royalty recently released some good results as well last week, and that's 100% club nailed on, as is Investec. And Duke's been the second biggest improver in this portfolio, up 17% as percentage points since the last update. Touchdown on plus 500. That's a really good dividend stock, and I think I've got a small managed fund here that's at 58 points. I believe that's long-term compounder. And then Argo Blockchain had a great week or two, which is of course linked to the Bitcoin price effectively. That's up 40%. So that's my UK portfolio. Really pleased with that overall performance. You see it's pretty much all green, and the reds that are red are single-digit reds. So I'm hoping next time, this certainly by the end of the year, there should be a full green pie chart, which would be amazing. But of course, full green is one thing, but actually, am I hitting the run rate and the rate of return? And you look at that biggest position, FTSE 100, up 22 points, but that's over a very long period of time. Same with Shell, up 8 points, again, over several years. So those are two that, although are positive, which is great, rule one, don't lose money, they are in the run rate. So that's why I've been chipping out that FTSE 100 holding. Also got an American portfolio, and click on screen now to see the review of my American holdings in the same format as this.